morning, guys. Welcome back to the channel. My name is Stalin Trades. So let me start by apologizing. I should have gotten this video out to you last week, I think on Friday, because we had the US bank holiday last Friday. So I should have gotten this video out, but I got caught up with something else. So I will merge today's video, a review of what we had last week, and a pre-market analysis, I think we can call it, for what I am looking at this week. So for me, last week was a good week, I can say. Not because every trade worked perfectly, but because I was able to identify a market thesis or bias. I executed it according to my plan, and now it's time to review that outcome objectively. Yeah, so I'll review the gold trade I had last week, I think, as well as GBPUSD, that is GU, and explain why I got into the trade, where I got into the trade, and where I exited the trade. See if there's anything I could have done better, and then look for opportunities that I'm looking at this week. Right. So let's get into it. So last week trades were based on a couple of ideas. So first and foremost, I think most importantly, last week was Federal Reserve expectations. Last week on Wednesday, we had the federal funds rate, which, as I had explained in last week's video, the expectation was for the Fed to hold rate steady, and I think that had already been priced into the markets and had already been priced in. So the most important thing was looking at the FOMC statement and the economic projections to establish where the Fed was standing on in terms of interest rates. That is, if they were going to remain hawkish or dovish. And based on the data, that is based on economic data, based on economic growth bias, based on inflation data, based on jobs market data, based on what we were seeing in the bonds market, then for me the expectation was that the Fed is going to have a hawkish stance, and the bond yields were elevated, inflation sticky, inflation data, the CPI came out at 4.2% and PPI higher than expected at 6.5%, as well as stronger than expected economic data. You can see the PMIs, both manufacturing and services, had come in stronger than expected. Consumer confidence stronger than expected. We did have GDP, which was a bit lower than expected, and retail sales a bit low. Retail sales had held neutral, but overall, based on economic data, based on macros, I was having a expectation that the Fed would remain hawkish, and that is exactly what we saw. So for me, that meant dollar strength. And as you can see, last week, Wednesday, the dollar was playing at around 99.2, which was within a range that it's been stuck in for about a year and some 2-3 months. Yeah, and so finally, we did see on the lower time frames, at least, the dollar index push a bit higher, breaking above that 100.5 level. That's been a strong support level. And yeah, my expectation, based on the data again, is to see the dollar index continue to push higher. So that means dollar strength, which for me, with the current market conditions, it's not always that because it's dollar strength that you'll also see gold. You will see gold bearish and silver bearish, but based on the current market conditions, that means for me, bearish on gold, bearish on commodities rather, that is both gold and silver, and bearish on pairs such as GU, bullish on USD CAD, USD CHF, USD JPY. So I think let's start by reviewing where we were at on Wednesday. I had my entry around here again based on fundamentals, as I have explained, and technicals. Gold was on a clean move to the downside, and I did get a flag. It was not the best looking of flags, but I did get a flag for a retest up to this level at around 43.50s, 43.50s, 43.60s, and yeah, you see price push off from that level and had a clean move to the downside. I did exit the market on Friday before markets close. I don't like holding trades over the weekend, especially with Trump. One tweet could make the market opens with a crazy gap. So I did close that trade before Friday. Again, based on my bullish stance on the dollar index, I did have a short entry on GU, which I took, I believe, on Wednesday. I deleted it. I took right around somewhere here with my stops were above somewhere here. I was expecting it to push even below this. I believe up to, yeah, I was expecting it to push to around 1.31, 314, around there. So yeah, we did have a clean move to the downside. Um, For me, this geo trade was not just based on what we were seeing on the dollar index, but also what we were seeing, the data we saw on GU. On Wednesday in the morning, we had GU inflation data come out, the year-on-year CPI. It came out lower than expected. The expectation was inflation was going to rise again with the rising price of oil due to the Iran war and the supply chain shocks for oil. So there was that expectation that there was going to be high inflation, but surprise, it came lower than expected. Again, the expectations of the data that is going to come out are what usually move the market. So it came out lower than expected. And for me, that created a scenario of an interest rate differential where you see where the US there is rising inflation. So the possibility is the Fed will have to hike rates to deal with the inflation problem. Again, the Fed usually Fed targets inflation to be around 2%, um, right? And we see it's clearly more than double that. And at the same time, we saw inflation data for the pound coming lower. So for me, that created a scenario where we could see an interest rate differential, where you could see the Bank of England having to cut rates while Fed has to hike rates. So that interest rate differential creates for significant moves in the market. I think I'll make a video on that maybe midweek, explaining interest rate differentials and why they're usually catalysts for significant moves in the market. So yeah, I think that's why. No, I think that is why we had such a significant move in the market for GU. I think it was about a 2%, yeah, nearly a 2% move from those Wednesday highs. So yeah, so for these two trades, for GU and for gold, I was about to close around 7 or 8% profits, which was a nice move. Uh, Not really happy about it. Again, we have to remain neutral in the markets. Yeah, yeah. So I did have a Bitcoin trade that I was holding. Yeah, with my previous entry, which was around here. Uh, the reason you can't see my stop loss for this short trade is because I have already trailed to break even, and today I'm seeing another possible entry. I've seen another entry here. I've seen another entry here. Again, based on fundamentals and current market conditions, that is why I have taken this entry. And as well as you can see, it's a clean flag that has retraced, with prices retracing all the way back to the 50% fib level from these highs. And yeah, that has given me we also have a support and resistance level right here at around 64,500 or 64,600. So that is why I have this BTC trade. So I have two BTC. So I have those BTC trades. One is running risk free, this one with limited risk. Ideally, my targets for this one will be around these lows where the flag started. Again, because this is playing out within another flag trade in higher time frame, that is H4. That is why I've extended my targets all the way to around 59. I think my targets are at 59 to 100. These lows. So yeah. Again, it's the same for Ethereum. We have this higher time frame flag. It's given me again this lower time frame flag. So I have those two trading, those two moving as well. For Ethereum, I think I've already moved my stop loss into profits, with my stop loss being at around above this high. So if it goes and hides and creates a new lower low, then I will move my stop loss again to above these highs, these previous highs there. Yeah, this morning those are the trades I have. I also have no, I don't have a gold trade. I was looking for a gold trade because as you can see, it didn't get to my initial targets from last week, so I was looking for it to pull back from around 50% Fibonacci retracement level. It hasn't quite gotten there yet. Typically, I don't like entering trades when, again, based on my back testing data. If the trade has not tapped the 50% fib level, it was almost there, missed by a few pips, but for me that makes the difference. So for this gold trade, I'm sitting on the sidelines. If we could see it maybe push a bit higher and tap into that fib level and then come back down, maybe and then give me an entry signal based on the candlestick it forms, maybe I could get an entry. Just to show you an example, we have had silver, which has done almost the same thing gold has. It did come tap all the way to that golden ratio. And yeah, we could see it continue lower again with proper risk management. If it pushes and takes me out, then I'm out of that trade. Yeah, so but yeah, we'll see how they move. So this week I still have the same, more or less the same bias I had last week. Still bullish on the dollar. We could see it push higher again based on the data. Uh, if you look at the bond markets, the 2-year yield bounced off of this level very nicely and has started pushing higher. We could see go even higher to the highs at around, I think, 4.4%. Yeah, around 4.4%. So you could see it push up to these levels around there. So let's see how it goes. So yeah, I've not really looked at the 10-year yields. I've only been looking at the 2-year yield, and you see a nice clean move. So it gives me or reinforces my bias for the week. Uh, so yeah, I think that's it for me for the week. So I think dollar index, if it continues to play out, with this structure, seemingly has broken out of this level, but we need to see it push a bit higher, maybe to around the 1.5 ish level. Then yields, we could see the 2-year yield continue to push higher, and with Fed expectations, summer Fed coming out strongly hawkish. I think during the statement that Kevin Nash made, we had his tough stance on inflation. Inflation is high and it's sticky, so they may have to hike rates to deal with inflation. And at the same time, the job market is performing well, so there won't be really a downside to hiking rates right now, and Kevin Nash is more proactive. And again, the US economic growth seems resilient. So yeah, we could see them push significantly higher. So as long as yields remain elevated and inflation remains sticky, then we I'll remain aggressively bullish on the dollar index for now. Yeah, so that means I remain bearish on GU. So right now, I don't have a position running on GU. I'm waiting to see if it breaks below this level. If we could see it break below, maybe do a retest, then maybe I will be looking for entries. And I believe on the higher time frame, you could see it push down to around 1.2s or even lower. So yeah, it's for me right now with currencies, it's a wait and see. Actually, there is no currency pair that I have set up right as of right now. As of today, I only have a setup on BTC, Ethereum, and silver. And those are the only trades that I have currently running. If they play out well, good. Of course, I've managed my risk, so I'll see how they play out. I don't have an entry on gold. Again, I'm waiting to see if it taps into this level. If it does, then I could be looking for an entry based on the candles that it forms. Yeah, I think I think that's it. I'm going to wait for setups. I'm going to avoid trading irrationally because if I enter a trader that breaks my rules, it would be irrational. Opportunities will always be there in the markets. Yeah. Yeah. So generally this week I'm waiting for those things. See how bond yields continue to push. To see geopolitical developments, what happens with the Strait of Hormuz, and if the dollar continues to be strong, I'm going to be bullish. This week, I think on the calendar we have a couple of news for the dollar with manufacturing, with PMIs coming out on Tuesday, and yeah, PCE on Thursday, GDP on Thursday as well. And Friday, it's just revisions for the consumer sentiment and inflation expectations. Yeah, so that's it. I think if things remain the same, we could see PMI is coming out strong. Above 50 is it's usually a good indication. We'll see how they come out on Tuesday. If anyone tells you they know how they'll come out, I think that's a flat out lie. So we have to wait and see how the data comes out, and then from there, establish a bias based on that. So as always, I will document the trades I take. If I make any mistakes, I will show you. If I take losses, I will show you and maybe try to understand why I took those losses. And yeah, that's it. Remember, this is not financial advice. This is not signals. You have to do your own analysis, do your own research. As you can see, I usually try to read. Is it a must for you to know these things? No, it's just my preferred trading style, just my preferred trading style. You trade uh, in the style that you see is best for you. And yeah, I hope markets are favorable for you this coming week. And I will see you midweek. Maybe I'll make a video on interest rate differentials, explain what it is, and show you examples of how it has influenced the markets in the past. I have a very good example on GU, I think around 2022, 2023. I think midweek I'll be dropping that video. So I'll see you guys soon. Take care, observe risk management, and all the best. Ciao. May the pips be with you.